It's Friday, and that means that we can wrap up another trading week. Now, it's been a short trading week because today the markets are closed, but nonetheless, there was plenty of action. So, in today's video, I'm gonna go over my portfolio, see what has happened there. I made some buys, and I'm gonna show you which stocks I bought and why. Then I'm gonna go into Snowflake because the CEO has bought a hefty amount of shares, and we're gonna see how many and why I think he did so. And then finally, I want to wrap this video up with giving you some thoughts about current market conditions, because I can see a very divided market with two camps, one being pretty bullish and one being fairly bearish. So let's start off by diving into my portfolio and see the buys I made. As we can see here, I bought some shares and I did not buy any Ferrari this week. Now, there is a good reason, in my opinion, why I did so and how this may affect future buys for this portfolio. So, before I'm gonna go into the holdings, let me give you a reminder. This is my YouTube portfolio, it's not my main portfolio. And the goal of this portfolio is to show you how fast your account can grow when you invest or when you DCA a reasonable amount into the stock market every week. Now, for me, this is $125 or 125 euros, as I'm from Europe. With this 125 euros, I try to divide this between stocks that I think are going to turn around, which have been in a slump, between some stocks that are very stable factors, but can still have plenty of growth in front of it. And then finally, I have some growth in there. Now, let's start off by looking at Enphase. And what we can see here is that Enphase has had a reasonable bump in price on Wednesday. Now, was there a good reason for it? Maybe yes, maybe no. But I will take you to the news article which explains what happened there. Now, here we have the article, and it's an article from Investors Business Daily. The article goes over why solar stocks ran last Wednesday, and the important part comes here, because the article says, meanwhile, analysts at Mizuho on Wednesday reiterated a buy rating for SolarEdge stock. The client note followed a meeting with SolarEdge officials, and Mizuho reiterated a price target of $106 for SolarEdge stocks. We reiterate our buy rating as destocking, revenue growth, and margin recovery appear on track for the year. Now, this is quite important because solar stock have been in a nasty downtrend all year. I will show you the chart in a minute, but basically, as the Fed started increasing the rates, demand for solar has been coming down because many of the people that install solar panels on their roof take out loans for it, and these loans have become incredibly more expensive. Now, we have seen signs of recovery, or at least Enphase has already told us in their latest earnings call that they see signs of bottoming in mostly Europe and most parts of America. But now that Mizuho is reiterating this, that kind of sends a positive shock throughout the sector. And that is what we have been seeing last Wednesday. So if we look at the chart, we can see the downtrend, which I just told you about, clearly visible. You can see that at the end of 2022, well, the stock has basically been going straight down. It is now looking to somewhat stabilize, as there has also been somewhat of an uptrending support, but nonetheless, the stock is off a lot from its highs. Now, if we just take a look at last Wednesday, we can see that it's this candle. We can basically see that the stock has been popping up straight into the 200-day moving average. Now, when I look at this chart, I can see where the thought of a recovery is coming from, because the chart is an example of sentiment. But do I agree with it? I think there is slightly more pain ahead, also for this sector, and that the recovery might not be as quick as people think. Now, the stock market is, of course, forward looking, and with my strategy, I cannot really wait for clear signs of recovering. So I just have to DCA and try to catch the rounding of the bottom. And that's what I'm trying to do here. Okay, so then we have Ferrari. And like I just mentioned, I didn't really buy any shares of Ferrari this week. And the reason is due to how the company has been running, or the stock price have been running up. I will show you it in a minute when I look at the chart, but let's first go over the news. Because as we can see, there is some news, and that is that RBC is raising the price target on Ferrari to 460 euros from 380 euros, as they see electric vehicles a significant opportunity for revenue and unit growth. Now, they also kept their outperform rating. Okay. So we know Ferrari is working on an electric car. And you might say, well, this sounds really weird because Ferrari, it's supercars and supercars make noise. Now, Ferrari has a patent in order to make sure that the car is still creating sound and it still should be an accelerating experience. But let's look at the chart and I'll show you why I did not buy any shares of Ferrari this week. Okay, so here we have the chart of Ferrari. What we can see is that Ferrari is quite extended. If we look at the 200-day moving average, we can see that Ferrari is trading about 25% above it. Also, the more short-term 50-day moving average, we're about 10% above it. I think that means that Ferrari is kind of waiting for a slight pullback. And as the valuation is quite high, I don't think it's the best place to allocate my money to right now. Now, I do hope that it somewhat pulls back. And as I've been buying high already, that would mean that I come down and this stock would dip slightly into the red for me. But that doesn't matter because once again, just like with M-Phase, I tried to catch the rounding out at the bottom. I'm not going to time the market because first of all, it doesn't fit my strategy. And second of all, it's extremely difficult. And I'm not going to be perfect with it, so why try? But I can try to make good allocation choices. Then we get to Monday. And Monday is a stock I added to more significantly. Monday has been going down from its peak, and that means that it is creating somewhat of an opportunity to buy more. Now, I do think small caps will rally this year, and Monday, of course, with an $11 billion valuation, is part of that small cap category. Now, once again, last Wednesday I released a video going all over the stock and it explains why I like it as much as I do. Now, we can also see that Monday is my second biggest stock in this portfolio, and that also goes for my personal portfolio, which I showed also in that video of Wednesday. If we look at the news from last week, we can also see that JP Morgan has raised the price target to $270 from $230, and it keeps the overweight rating. Now, Monday.com, this article states, has an average rating to outperform and price targets ranging from $190 to $280. To $190, that's also my average price in my personal portfolio, so that's fine. And $280, yeah, I can see it going there. And in Wednesday's video, it might become clear why. But let's for now just look at the chart and we can go over some details there. So this is what the chart of Monday looks like. And what we can see is that it's sticking quite well to its averages. We can see that it's moving right along the short-term trend line of the 21-day. And it's also not far above the 50-day average. So in my opinion, this represents a buying opportunity. Now, can it fall? Yes, of course. It might come down to the 200-day. But in my opinion, that's very unlikely because this company has been on a roll. They have great guidance, great leadership. They show exactly to analysts what they are going to do. They even put out a guidance from 2024 to 2026 in order to make it clear what they are doing. They are releasing a new product at the end of this year. So there's not much more to say about Monday, except for the fact that they are just on a roll. And I expect this momentum to continue. Okay, so then we get to Moody's. And Moody's is just like last week, nothing really happening. I added a small amount to it because I don't think the stock is actually trading cheaply. Although I do also not think it's very overvalued. So I just basically added a little to it in order to just keep on positioning myself. And Moody's also, I don't expect it to do very much. I want this as a stable factor in my portfolio, but also this might mean that on upswings it kind of lags the portfolio. It's a stable factor. I don't mind it. And with that, I also immediately go into S&P Global because this stock has the exact same job to do in my portfolio. Now, I know S&P Global and Moody's might be considered to be a somewhat similar position. They have differences, although the market often seems to not think so. They both do credit ratings, but they also have side businesses which are vastly different and they don't compete whatsoever. They might even be in the same companies. Okay, so we can also look at their charts for a minute. I will go over them quickly and then I'm gonna hop over to PayPal. Okay, so here we have the chart of Moody's, and we can see here that after the earnings release, the stock dropped a bit, but this has been basically immediately bought back up by investors. This is also what I hope to see because I want this stock to just continue to push. Now, this stock is also not as extended as others might be, because if we look at the 200-day, the stock is trading about 10% above it, which is not a lot. So let's just jump into S&P Global immediately. We can basically see that the charts look quite similar. Although S&P Global has somewhat been trading down, in my opinion, there's not really a specific reason for it. So I don't mind it. It will just give me an opportunity to buy at better places. I don't think these stocks are gonna crash or get into a big downturn. I don't see that happening. The only possible explanation I have for it is that these stocks are somewhat interest rate insensitive by the fact that they do credit ratings. And of course, when debt is cheaper, more companies will take out loans, and these loans have to get rated by Moody's and S&P Global. Now, I did add significantly to PayPal with about 50% of my inflows, so to speak, for this week. And the reason I did so is that I see some very bullish signs for this company. I have also done a complete PayPal stock review and my analysis of it, and I will link that video somewhere up here as well. But when I show you the chart, I can explain what I mean. Now, there was also a news release today that PayPal is adding someone to their board of directors, and we're going to take a look at that article. Now, the news article states that PayPal plans to appoint Carmine DiCibio to the board of directors. Now, the board intends to appoint Carmine DiCibio, EY's outgoing global chairman and CEO, as an independent director effective July 2024. So then we have some sweet talk from Alex Chris, but we want to get more into it here again, because there we can see that if appointed, Carmine will be helpful in sharing his expertise in driving transformation and profitable growth in markets around the world and help us revolutionize commerce globally. Now, why do they say this? Because the CBO has been with EY, one of the largest professional service organizations in the world with more than 380,000 people in 150 countries since 1985. So yeah, the guy has experience. That's basically what they are saying. So that goes on a bit, but basically what I wanted to get into was visible in the charts. So what we can see here is a representation of sentiment, because that is, in my opinion, what the charts are. And we can use the trend lines as an example of how sentiment is going. So if we look right here, and it's just tiny for now, but this part, it's in the trend lines. What is happening here is that the short-term averages are going above the long-term averages. And the reason I find this notable is because if we go all the way back over here to October of 2021, that's where short-term sentiment went below long-term sentiment, because that's basically what I'm gonna call it here. So for the first time since 2021, we're in 2024 now, so we're gonna say 2.5 years, because saying it's 3 years is a bit overdone because it's March and this was October. But we can say that for the first time, the short-term sentiment is back above long-term sentiment. And this is often seen as something very bullish. It's called the Golden Cross. And in my opinion, This is because all the steps that Alex Chris has been taking. We can see that he keeps adding new directors, new executives. He's releasing updates, maybe not big innovations, but small things which will help the core product. And we can see here in this chart that this may actually be paying off with institutions. Now, I do think PayPal is in the short term going up quite a bit. I mean, if we look over here, this is just for March and the stock is up about 15%. It's a bit much, but in my opinion, it's also quite justified because the stock has been very much suppressed. Now, I do think this stock will offer great opportunities going through the year and maybe not right as of today. But as I was looking at this and realizing this, I just became more bullish of the company and I want to have more exposure to it as I think these are still great prices. So then it's time for our last stock in this portfolio, and that's Rivian. Now, I just did my normal add to Rivian, and I'm working on a video going all over Rivian as a company and if you should invest in it or not. I'm gonna explain my thesis on Wednesday. That's when I release those videos. And if we look at the chart, I can show you why I just bought Rivian. So what we can see here is that Rivian is just in a downtrend. The stock has been going down. It has been downtrending ever since the IPO. And I get why, because the IPO was grossly overvalued. However, at this part, and maybe even a bit lower, is where I can see the stock actually have value. I can see it coming into decent value territory. And in my video that I'm going to release on Wednesday, I will explain why. So if you are interested in that, make sure you subscribe and check back in on Wednesday. Just like with Enphase, what I'm trying to do here is catch the rounding out of the bottom, because the company explained that they will try to become profitable during Q4 or during the end of the year. So in my opinion, that's Q4. I don't really see them becoming profitable in Q3 or Q2. Now, the problem Rivian has is the same problem that Tesla has, that Enphase has, and that many other stocks have, which are big expenses and often loan intensive. People don't really want to buy cars right now, and especially not expensive electric cars. Now, I'm not going to make predictions about what the Fed will do regarding interest rates because I'm not an economist and that's not my specialty. I just look at what they communicate and if I find it rational or not. And I think that when they communicate about 3 rate cuts this year, I think it's possible. I think there are some caveats to it, but that's not for this video. What I then see happening with Rivian stock is that it's maybe dipping down slightly more, but I don't really see this falling to say $5 or for example. I don't see this falling another 50%. Because just like with Enphase, the stock market is forward looking, and I think that they will realize that Rivian might get towards profitability, and then investors want to be part of it. Okay, so now that we have gone over my portfolio and why I made the choices that I made this week, it's time to look at Snowflake. Because at Snowflake, the CEO did a heavy buy, so we will see if that's as meaningful as it looks and whether you should take notice of it or not. So if we look at the news article that came out regarding this CEO buy, we can see that it says that Snowflake's new CEO snaps up shares. Now, Snowflake stock edged higher Thursday after the new CEO purchased 5 million of the cloud-based data warehouse company's shares in the open market. Now, that's a sentence. Late last month, Snowflake installed Ramaswamy to the top job, replacing Frank Slootman, who has retired. Slootman has been CEO for nearly 5 years, steering the company through its 2020 initial public offering and overseeing a period of hypergrowth. Now, this paints a very positive picture for Slootman, the old CEO. Basically, how I view it is that he took a company, immediately pushed it towards an IPO, then raked in millions upon millions of stock options. The guy has made so much money from this IPO. And then when it got tough, he said, okay, I'm done. I got my money. I'm gonna retire, I'm out. Next person's problem. And that's where Ramaswamy now comes into picture and he can try to fix it. So Ramaswamy bought 5 million of Snowflake stock, and that might seem like a lot, but what you have to question yourself is why did he do so? Because there might be two options. One, he is very bullish on the stock and he sees an opportunity that nobody else is seeing, and he just has to be more exposed to it. That's, of course, a very positive sign if this would be the case. Now, the second option is that he came in as new CEO of a stock that has absolutely dumped after the earnings release, and now he has to come in and stabilize it. And he says, okay, I'm gonna buy some of the shares to make it look like I'm very bullish, and I'm gonna do it with such an amount that it might look significant, but maybe for him it's not. Now, this is something you have to determine for yourself, but I took some context for you to make your own judgment with it. Let's first take a look at who is Ramaswamy. He worked at Google for nearly 15 years, with his latest position being Senior Vice President of Ads and Commerce. Now, in 2019, he started his own company called Niva, and this was bought by Snowflake. That's how he got into the company. And what, in my opinion, is important to know about this acquisition is that it was done for approximately $150 million. Now, Ramaswamy, of course, wasn't the only owner of this company because he had some funding rounds before and he was co-founder. So there was someone else. So it's not like he's worth 150 million, but being senior vice president of ads and commerce at Google, I can imagine is quite a well-paying job. Then having Niva and having a buyout for 150 million, you're also going to rake in a lot of cash from that. So when you buy 5 million of Snowflake stock, I don't know how significant it is. It's at least notable. So if we look at Snowflake stock, we can see that it's come down a lot from the IPO. The shares actually peaked in late 2021 at a price of about $400. So it's down about 60% from its peak. However, it has been down as much as 70%. If we look at this chart, you don't really have to be a chartist to see some uptrend going on here. And this is also where Ramaswamy bought. Well, it's not really an uptrend, it's more so of uptrending support. But you can see that the stock has been showing signs of bottoming around that upward support level. So maybe 5 million sounds like a lot, but I doubt it's actually that much of an incredible amount for him. It's showing confidence in his own stock, but I think more so that it's a buy in an attempt to stabilize the stock from falling. Okay, so then it's time for the last part of this video, which is my thoughts on the overall market. Because like I said in the intro, I see two camps in this argument. Because we have one side that says that stocks are going to continue to go up, and one side that says that stocks are heavily overvalued and we are due to a correction or even a recession. Now, I like to be more level-headed regarding this, and I think that the truth is somewhere in the middle, because I do think that stocks have rallied a lot. And what I see is a lot of speculation in the market, because we can look at Bitcoin and other smaller cap stocks which are going on incredible runs. So this tells me that there's an incredible risk appetite in the markets. We can also look at the CNN Fear and Greed Index, and we can see that this is skewed far into the greed category. So what this index shows us is the risk appetite of investors. Now we can see that we are currently in the greed portion of it, and we are edging towards extreme greed. However, we have been trading in extreme greed for quite some time, and also highly into the greed category. If we look at a timeline, we can see that since mid-December, we have basically been in the 70 part of greed, and we can see here that 70, well, that's quite high. We know that people want to take risk. Bitcoin is nearly at all-time highs, trading against all-time highs. This is taking with it a bunch of other stocks. And we can just notice that people want more and more and more. People are not thinking of defense, they only want to think about attacking and making money. So when we look at it at a chart, we can also see it. Now, this is the S&P 500 or the SPY, the ETF. And what we can see is that since the last correction in October, here from the bottom, stocks or the S&P 500 has rallied almost 30%. Now, this is of course a lot in a few months, but I do think that we can continue going. I also think we are poised for a correction. Now, these are two counterintuitive things, but what I try to say here is that I think that we are not heading towards a recession. I'm not in that camp. I'm also not in the camp of going fully into attack, and I'm trying to be a little bit more level-headed. I do think the markets can use a bit of a breather, but I don't think this has to be a lot. Now, as we saw, the S&P 500 gained about 30% since October. And when we look at the Nasdaq, we can see that here, there's not a big difference in it. The Nasdaq also gained 30%. So this tells me we are not heavily dependent anymore of tech stocks in the market, and things are broadening out. And with that, I also want to close this up because I think markets are due for a little correction. Now, this doesn't have to be a 10, 15, 20% correction. I think a slight 5 or 7% drawdown is good. It resets traders and investors to go from full attack mode into slightly thinking of defensive as well. I think that will be healthy for the markets and therefore a good thing. Now, if you enjoyed this video, please remember to give it a thumbs up and subscribe to my channel, as I try to make 2 videos every week. Now, as a reminder, last Wednesday I did a full analysis of Monday. It's a big video and I highly suggest you look at it if that's a company you're interested in. Next Wednesday I will release a video of Rivian, going all over the company, the stock, the financials, the management. So if you're interested in that, stay tuned for it, and I hope to see you next week.